Friday the 13th, it's early in the morning, so it could be bad luck, right? It could be that we're all going to start to be excited that things are going to turn, that we know what the war is and kind of the scope and scale and the expansion of it. And now people can start to come back and not so afraid. Hopefully, Friday the 13th doesn't jinx that. So I'm David Maris. We have Bob Morris. We have Kevin Bakes Baker. We're going to talk about oil and gas. We're going to talk about some ETFs. I'm going to talk about a conference that is wrapping up here down in South Beach yesterday and some takeaways from that. But Bob, why don't we talk about oil and gas, the Straits of Hormuz, and all the are we taking any cruise ships through there anytime soon, or what's your outlook and what should we
Yeah,
be doing with these oil and gas names that they have been doing so well?
yeah. So you said we know the scope and expansion of the war. I'm not sure that we do. I think we've opened a bit of a can of worms here, and it's once you sort of hit the obvious targets, it's harder and harder to figure out where the little hidden targets are and where they're launching all these um, drone clusters from. And now you got the proxies getting involved, and it's sort of, I think, evolved to the stage where it's getting messy and it's hard to put down. In other words, it's just there is no surrender, and I don't think there's going to be any unconditional surrender as Trump had demanded earlier in this whole situation. And my fear is it just continues to drag on, and as it's done so, uh, Iran has become more and more vocal about attacking oil facilities or shutting the Strait of Hormuz and saying the other day, get ready for $200 oil. So they continue to dig in their heels here and fight back. And there's no surrender. And so that just, it makes me concerned that we've got a protracted conflict here that's not going to provide any ease or relief for oil prices. Now, oil's off what, buck and a half, $2 this morning, still $94 a barrel, and that's all we're able to manage with a few things going on here. The U.S. issued a 30-day waiver on Russia exports of oil, so now for 30 days, Russia can sell their oil to whoever they want, and there's no sanctions. There's talk of releasing 400 million barrels of oil from our SPR, and so those two things maybe ease oil prices a little bit, but we're still subject to any news headlines or the next missile that may hit a tanker or other cargo ship in the Strait of Hormuz. And for all practical purposes, the Strait of Hormuz is still closed, and I don't see any signs that this is all of a sudden Iran's going to shut down or there's going to be a ceasefire. Now there could be a ceasefire. On the other hand, as we've talked about before, there could be on the part of Iran a scorched earth policy where they continue to attack oil facilities and maybe set their own oil facilities on fire. Who knows? But in the meantime, as you know, they named Khomeini's son as the new supreme leader. So they're not, they're still functioning, for headline purposes. They still appear to be in business. So I still think here at $94 oil, I think the risk is still skewed more to the upside than the downside. And even if you say, well, I'd rather take the under on this, we're not going back to 60, 70, $75 oil, in my opinion, anytime soon. And so this still underpins what I believe are solid valuations for these companies. These companies are minting money every day. Oil's up here at $94, $100 oil. They're minting money. And so my view is I'm sticking with the oil names. I'm not selling anything here. I'm not writing cover calls and anything. I'm just writing this and seeing how this plays out. And nobody knows how it's going to play out. That's the thing. There's a lot of huge amount of uncertainty. And at least for today, we're going into the weekend. So I don't think anybody's going to want to sell oil to be short oil going into the weekend, given the uncertainty of you don't know what's going to happen over the weekend. And a lot can happen. And I don't think there's going to be a ceasefire. I could be wrong. I don't know. But I'm not betting on a ceasefire over the weekend that all of a sudden come Monday, all the tankers are cruising through the Strait of Hormuz again. So I'm just sticking with the names that we've owned here. And, I've dipped my toe in and bought a little LNG Cheniere in the meantime, but I'm holding on to all my other names.
So August 2027 futures are at like $67, for someone who hears that on like CNBC of like, well, this is obviously going to be resolved shortly because the 1 year futures haven't moved. Is that, well, look, 1 year futures don't move until we get a little bit closer or things get a lot worse. I mean, how should somebody who doesn't really understand that argument think about that?
Well, that's a year and a half. I mean, is this going to be the same situation today, a year and a half from now? No, no. But it's not going to be over in 4 weeks. And so that's what we've argued all along. Near term, it's going to continue to underpin this higher oil price. Now, the futures market is saying, well, year and a half from now, one way or another, this is going to be resolved. The war is going to be over. We don't know how or when or what form it takes, but it's not going to. You're not going to keep the Strait of Hormuz closed for a year and a half, which I don't think you will. Something's got to give in the meantime, one way or the other. And whether it's just complete obliteration of Iran or if it's a ceasefire or some agreement at some point. But that's what the futures market is telling you: is a year and a half from now, it's not going to be the situation it is today. And and that's why these stocks are typically valued off the 1 year strip, sometimes the 2 year strip on oil. But even then, again, with them minting money today, and given where the valuations are, as long as this conflict's ongoing, as long as you've got oil anywhere up here 70, 80, $100 a barrel, I'm sticking with the names.
So
But
you're
that's
sticking
what's
with them. You're sticking with them, but at what point do you say, you know what, I I have these. My thinking was I'm going to have these for 10 years or for longer, and I know these. What point do you say, you know what, we've this is the best it's going to be, or some of the best? I'm going to peel some off.
I don't know. You got to watch how things evolve. And for me to say, okay, I'm going to peel things off or maybe write some covered calls, a name like C&Q I've owned for many, many years. I don't want to sell it. It's going to be volatile. I mean, I'm not going to pick the top on it, but at some point where it looks like, well, maybe there's going to be a ceasefire, or maybe they've taken control of, we've taken control of the Strait of Hormuz. They don't have any more missiles. They don't have any more ships. They can't do anything to block it. And oil's going to start flowing again. Maybe I'll consider writing covered calls. That's the way I play, out of the money covered calls. That's the way I would look at it. Am I going to sell, try and be smart enough to call the top and sell the stocks at some point? No. I mean, my
Okay.
core holdings, C&Qs, the Chevrons, the EOGs, Exxons, I really can't see myself selling them. If anything, I write covered calls to take in a little premium. But given the dividend yield, given the long term prospects here for energy, and remember, a year ago they were calling for this oversupply in 2026 that then would dissipate beyond 2026. So the concern was 2026. Well, we're not facing an oversupply for 2026 anymore. And even when we were saying, well, it's going to time back up beyond 2026. So I still think the fundamentals for the sector, for oil, and in particular for natural gas in particular, I think the fundamentals are very strong. So I'm as core holdings, I'm not going to say, you know what, I think oil's gone as high as it's going to go. I'm selling all my energy stocks. I'm going to buy them back 20 points lower. I'm just not. I don't think nobody can predict the market to that extent to say that.
Mhm.
Hey,
So
Bob, just
when companies like
just
this are
one
printing
thing I would
money,
just have you look at is when uh, these stocks get as far above the 200-day moving average as they have ever been, and that's
Yeah.
where we are right now.
Yes.
It's long in the tooth, and that
Yeah.
doesn't mean they're going to come crashing down, but it's really hard to get them to go up a hell of a lot. See Netflix, which we talked about at 130 before it went to the 80s. It's a phenomenon that occurs a lot. Um,
Hmm.
you know, uh, so just I'm keeping an eye on it, but C&Q and CVX are fitting that description. They've been monsters. You've been dead right, but they're extended a long way above their 200-day moving average.
Yeah. And if I look at, say, if I were to do something on C&Q, I'd look out to June. And right now, you know, June, say I want to write June $55 covered calls. Looks like I could get $1.30, $1.40 for them right now. I mean, that's not bad. You're talking about 15%, 20% out of the money pulling in 2% for 3 months on the call premium, more than 2% on the call premium. That's not bad. That's not bad. And as David pointed out, if you're looking a year and a half out at oil being back down, if you're looking 6 months out and saying, look, oil's not going to be at 95, it's going to be back down 80, 70, whatever, that's the right call there. Because then if you're looking out 3 to 6 months of seeing if oil's not continuing to hover around $100 oil and pulls back, then C&Q is probably not at above $55 a share.
So
But
here's a question: when companies print money like this, do they usually return it to shareholders? Like, are we going to see
yeah, and
large,
that's the
maybe not
amazing.
the yield? Yeah, sorry.
Yeah, that's the amazing thing about this sector right now is they're not looking to grow production. Every single company is returning capital to shareholders, and they've all got a plan. Whether it's EOG to return 100% of capital to shareholders, and typically it's with share buybacks. Now, some of these companies may pay a special dividend. Given this environment, given the amount of cash they're minting, maybe they'll throw in a special dividend. But they are returning it to shareholders, 100%. They're not plowing it back in the ground. Some companies like Diamondback, maybe they're returning 70% because they're using part of it to continue to pay down debt. But they're not plowing this excess cash back in the ground to grow production, to drill more wells. They're returning it to shareholders across the board.
Okay, so in a good way, maybe it's not going to maintain the yield, but you'll get it's not just the stock price appreciation. If you're worried, if you hang out for a little longer, what's the cycle usually? That it is it, when they return cash to shareholders, it's pretty soon after the bolus, or are we going to have to wait a while?
No, it's that quarter. It's in the current quarter. They continue to do it. They've done it for the past 2 years. Every quarter they come on. This is how many shares we bought back. This was the base dividend. This is how much debt we paid down. It happens in the current quarter. Now, maybe some companies say, well, gee, at these prices, I'm not buying back stock. I'm going to wait a little bit. I don't know. We'll see how that plays out. But they tend to do it today, right now.
All right. So how come you didn't tell me to buy more CNQ when I bought it? Never. It's never enough when they go the right way. So
Because you were loading up on hims and hers.
that's probably
There
true.
you go. Touche. Touche.
So, all right. Anything else before we move over to Kevin?
No, I think that's it. Natural gas prices haven't spiked the way oil is, but the fundamentals long term for nat gas are fine here, and I'm sticking with those names too. It's a little bit of a different story on natural gas than it is on crude oil, but natural gas is going to be fine too.
And this little cold spate in the Northeast, that's, I think we talked about it right before we started, or as we were starting. Like, is this something to? Yeah, that could affect things in the short term, or no? It's so limited it doesn't matter.
It's somewhat limited. The market's looking beyond the next week or two to the shoulder period, and then hitting in the summer as to where storage levels are going to be coming out of the winter, and then what we're looking at during the summer and going into next winter. So it's not for all practical purposes, the winter's over.
All right. Well, Kevin, what do you have for us today? You always have
Real,
some
real,
interesting
real
stuff.
quick, I want to stick it with Cheniere Energy LNG for 2 seconds. Bob, look at this 257.65 level back here, January of 25. When it gets above that, that's a breakout, and the volume is confirming that there's a lot of people that are seeing what you're seeing. So you see a print above 257.65, a close. You're going further north, in my opinion, after having a huge run, but it looks like a new move to the upside to me.
Yeah, and that's
But
the one
that's
name
what
I added. I've been nibbling at adding a little bit last week. So yeah,
I'd start chomping. 257.65. Start chomping. Okay. Anyway, what I have is Goldman Sachs. Charlie has been talking about this for a while. He just went in our internal chat, came back and said, yeah, 1Q is probably going to be good, but watch out for the other 3 quarters of 26. I bring it up because it closed below the 200-day yesterday, and is joining all of the other, not all, but most of the other financials, Bank of America, J.P. Morgan, Wells, all these have gone down. Now the capital markets people that are going to benefit from this supposed IPO wave with SpaceX, et cetera, coming, that isn't enough to move the stocks up. So we got a clear violation of the 200-day. My discipline would be I would sell a third. You can see that the volume is expanding on the down days, is what you don't want to see. It's I think Charlie's got whenever Charlie's got the fundamentals and I've got the technicals pointing in the same way, I think that's a pretty safe way to go. I think this is going lower from here. Maybe not on the first quarter, but we'll see. But and I'll get two more, but this is Goldman Sachs, and I don't like it.
Well, all right. So Goldman Sachs violated your rule. They are
Yeah,
in the penalty box.
yeah, and I would just sell a third. And full disclosure, I don't own individual names, and I don't own this one, but that's what I see here. Disney, this is kind of mom and apple pie right now. I I'm watching this 100 level. This is the gap up here back when they beat earnings back in March of last year, and they're spending too much time under the $100 level for me. I think very likely if it spends more time and closes below this $100 level, you test this 93 that you saw back here before the gap up, and 80 I think is the long term target. This is, and I pointed this out before, but this is uncanny to me. It's touched it in 2014. It's touched it in COVID. It's touched it four times since, and it better stop there the next time. Sorry, I can't move this. Anyway, it's as big as I'm gonna get. But I mean, you've got six touches of the support at 80, so there's a lot of market memory there. I don't think it'll break down through that the first attempt, but if it ever does, then you're really going down significantly lower. So unless you love Disney and you got the fundamentals nailed down, uh, I'm bearish on Disney.
Well, I'd fight you to the death for that. Disney, American as apple pie, like you said. In fact, more American than apple pie. People can live their whole lives without apple pie, but they can't live their lives without taking their kids to Disney.
You know how
And
expensive
just
it
like
is to go to Disney now?
You know how
I
expensive
don't
it
know.
is to go to a Broadway show? People don't complain about that. Go to a crappy movie, it costs you $30. Disney,
I know.
you see the fireworks of your lifetime, and if you stay till the nighttime light parade, you see the greatest LED light show you've ever seen on a parade. Come on, I'm telling you now, it's a bargain. I know it doesn't feel that way, and I agree that it's not accessible to everybody. That part
Yeah.
is like not part of Walt Disney's dream. That said, yeah, it's expensive. Lots of things are expensive. Health insurance is expensive. You don't hear people complaining about that. Oh, actually, you kind of do.
Yeah.
You do.
That's a sore point. That's a sore point. I'm just telling you what I'm seeing in the chart, and I know all those things, and Mickey Mouse, and the franchises, and brushing up on the Marvel catalog and all that. I just the stock does not want to go up; it wants to go down, and I think it's going to. So, um, unless there's a catalyst coming up that don't know about, I would not touch this myself.
All righty.
I got one
What
more.
else?
Since I'm as popular as typhoid today in the Maris household, but uh, IBM is joining the party, and you can say, "Oh well, it's not that bad for IBM. It's caught up in this AI hysteria, and Anthropic is gonna compete with them." And again, I say you can say that it's not that much of a negative, but you can't say it's a positive that you have AI competitors coming. And so this closed below the 200-day on that first scare, about $20 higher than it is right now. The 200-day has turned lower. The 50-day has just crossed through the 200-day, which is why I bring it up. These bounces are Garfield dead cat bounces to me. Okay, that volume is not impressive on the up days. So the sellers are dwarfing the buyers here. This is a very logical place for it to stall out this prior resistance that you see here. So um, you didn't in the days gone past. You didn't get fired for owning IBM or buying IBM. Frankly, both the computers and the stock. Now, I think those days are over. And what did I just do? I just told you that three Dow components look really bad. And if that's bullish for the market, then I've got to get a different chart book. But all three of those companies are in the Dow. The Dow has not joined to the party because I think they have enough energy so that they're rotating out of it. But the Dow ETF, come on now, I just had it. The Dow ETF has not broken down entirely, but it wants to. It wants to. So stay tuned. I can't get the Dow ETF here for some reason, but those are three Dow components that are really looking ugly, and I wouldn't touch them.
All right. That's very definitive. We kind of can pull up the Dow chart ourselves. I just finished up. There's a conference down here, three healthcare conferences down here in South Beach for this last week. It started out as a Barclays conference years ago. They held it for, I don't know, 20 years, 40 years, whatever. And now that Florida is so popular with the financial crowd, and pretty much with everyone at this at this point, anyone who's interested in lower taxes and better weather, um, the Leerink and I want to say Mizuho, and Wainwright. So there are four conferences all at the same week. They kind of play off each other. Since you're down here, you might as well come to our conference. A little bit difficult because of traffic and stuff, but if you want to see a healthcare outside JP Morgan in San Francisco for the Jefferies London conference, this is now the third strong contender. And I had 20 something one-on-ones, so it was busy. I'm going to just hit a couple highlights over the next couple weeks. I'll go through more. It's like reading a great book. You have to sit for a while and kind of cogitate on whether or not, what did this mean, then do the work that the questions came up in the Q&A and during the discussions. I will tell you the best the company that I didn't really know that was the one I'm going to do a lot more work on, and I like a lot, is 4D Therapeutics. So the small biotech company, they're working on there's a drug for retinal disease called Eylea. People who have age-related macular degeneration have to get injections into the back of their eye on a periodic basis. For some, it depends on how quickly it degrades, but every few months. So these are older patients generally, and they often need a loved one to bring them to and from the doctor's office because they have no other way to get there. You can't drive yourself the day you're getting this done. You can drive yourself there, but you can't get back. So there's a number of things that makes a longer duration of therapy really valuable. It also clears out the doctor's offices so that they can see more patients, right? If you don't have to go as often. The problem with that is that doctors get paid every time you visit. So there's a little built hesitancy for something that would last. What they're working on is a gene therapy that's localized gene therapy that would be like a one and done type therapy. So it's really impressive. The data so far has been very good. The work I want to do is to figure out whether doctors really will embrace possibly losing some money in the short term of not seeing these patients as often, but seeing a much higher drug price. So doctors get paid based on the price of the drug as well. So a kicker, a percentage of the drug price. And so if this is going to last forever, you could probably price it at 3 years or 4 years of therapy. So it's an advance. What I like is that it's definitely a game changer for these patients. So a lot of people are working on tweaks to things or how to make more money. This is a really, really interesting one. If the data that comes out mid-year this year doesn't look so great, then it's pretty binary. They have other things in development, but if this drug fails, you're in trouble because they're losing money. So it's I'm going to size it to the point that you go, okay, this is where this could be a 10 bagger if it works.
Mm.
If it doesn't, it's a zero or something close to a zero. For a more familiar name, Teva, which I've talked about a lot, um, I had talked about it last week or a couple weeks ago and said, stock's up there. I sold some. I'm happy to ride it out because it's really executing well. Um, I'd say I was mixed on the meeting. I mean, it was a group. This one was a group meeting, which was helpful. The Blackstone deal came up. To remind people, they did a deal to offload some of the expenses for this year and next year to Blackstone in a royalty deal for a product that is already partnered with Sanofi. So they were asked about whether or not it was just to manage the P&L. And after a lot of back and forth with a number of people, they finally said, look, we gave commitments to investors when we were near bankruptcy that we were going to move this company forward and we're going to have relatively stable earnings growth and we're going to control costs. This is part of that. I think that's a fine answer. I don't like off balance sheet financing or things like that. But I think that was should have been the answer to lead with. Like, hey, we're doing this because it helps us achieve what we want. Um, so as the stock's gone up, sometimes I see companies get too comfortable. Um, I didn't get the sense they're too comfortable, but I would say that it was not. I didn't walk away going, "This is great," but I do like that they're executing. So I'm going to digest that for a bit. Having already sold some, I really don't see a reason to change. I think that it gets down to the low 20s, um, maybe even the mid 20s. I'd be interested in buying back that little slug that I sold at the mid 30s. So um, let's see. Look up the chart at Amphastar. You could, and Kevin, if you have anything to say about the chart of Teva, please jump in.
Teva is this is the way you want corrections to happen. It's orderly. There's no dramatic spikes. The volume doesn't you don't it doesn't look like you've had big long term sellers that really want to get out yesterday. So I kind of wish it held this 30 level better than it has, but I don't think it's the kind of correction you want to see, especially if you have positive catalysts in your pocket, which it sounds like you do.
Okay, good. So met with Amphastar, which is a company that I really like the management team. I talked about a couple weeks ago as they put out their earnings and they added in some early stage development products, and I said, "Oh, the market's not going to like that." And they also missed earnings and had lower than consensus guidance for this year. So they kind of hit it on all. They were filling up their bingo card of things not to do, and the stock. If you take a look at that AMPH, it's reflected that there was nothing in the meeting that told me that there's a fast turnaround or they're changing course or anything like that. So a friend of mine asked, "Well, when are you going to step in?" Really, and I said, "Well, this is as much as I like the company, I like that they do generics that are hard to do, and I like the management team. The falling knife." Phrase that people use of in the markets of try to catch a falling knife. This is it feels that way. It just so I'm not going to be a hero. I don't know, Kevin, if you pulled AMPH up, what you think?
Yeah,
He's putting on the
the fact that the news was so bad on the earnings call that it took out this 28 level, on that day with a gap down on monstrous volume. I mean, that's the epitome of a falling knife, and it looks like it wants to be on the floor, but unless you've got positive, I keep saying this, unless there's positive catalysts coming up soon, and it sounds like you're at least the earnings report is 3 months away, and I don't get the sense that you see anything positive happening then. I think you got to at least come back to above this 28 level, the breakdown point, and try and fill this gap. And I got to see some volume picking up on the upside, and right now it's all negative. So I don't nothing to see here, folks, in my opinion.
all right, and I'll jump on two others. So there's I'll try to be brief. There are these two companies that I own, Syndax and Cura. Syndax is SNDX and Cura is KURA, and they're competitors. They have some overlap, and most overlap in the most significant areas. So I met with them back to back, and um, I asked. You always ask companies about their competitors, so Syndax, I asked them about Cura, and they said, "Well, we actually don't care." Um, they launched it around the same time in the same category, and Syndax is I don't know, 5 times the sales, something like that, maybe higher. And so Syndex's line was, "Yeah, they're in our rearview mirror. We don't care." Well, and I don't disagree that Syndex has a lot going for them, and it's up 85% since I bought it, so I'm happy. But if anyone's seen Rocky or any boxing movie, or you can come up with whatever similar analogy, is that don't count out an angry, beaten down competitor. And Kira, the meeting was good. I think management's interested in buying stock. I think that which I'd like to see, is a successful entrepreneur previously, and I think they're building a case that they're going to be a slow build, and that they have data coming next year that will ramp it up even more. But maybe there's no reason to rush into. Syndax is just executing really well, so I'm happy owning that. I'm happy to stay with it. Maybe there's not a reason to rush into Cura, but I do like these kind of beaten down, forgotten names. They're good on cash, and so I'm gonna stick with owning both, which I knew was a risk. That one, I was more concerned that one would be a disaster, and so I'd end up making no money, but being involved in things and worried about them both. But luckily, flat on one and up on the other. Um, I think the next chapter might be Kira catching up a little bit, but again, they're both good in different ways. I like if I had to buy one today, hate to say it, Kira, but I'd probably buy Syndax because I have to go with the one that's executing well. Winning begets winning sometimes. Um, and then let's see. Yeah, I'm gonna leave it there. We've gone a little long, and I can bore you with small caps names or bigger names like Fresenius, but we have next week to talk about it too. These companies aren't going anywhere. So with that, thank you everybody. Come see us at wallstreetbeats.com or passes.com/wallstreetbeats. We'll see you on Monday. Have a great weekend. Watch out for the black cats too.
Hopefully, it's an uneventful weekend.
Thank you all. Appreciate it.
Thanks, David.